Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about one of the most versatile and widely used indicators in the Forex market. We're talking about the MACD, or Moving Average Convergence Divergence Indicator. This powerful tool is often misunderstood, with many traders using it solely for crossover signals. However, when used correctly, the MACD can become a cornerstone of your trading strategy, helping you identify strong momentum shifts and make more informed decisions. So by the end of this video, you have a comprehensive understanding of how to harness the full potential of MACD from its core components to advanced trading strategies that can significantly improve your trading results. So without wasting any much of your time, let's get started. So first of all, I'm going to add the MACD indicator to our charts. All right, this is the MACD indicator. Right, this is the MACD indicator on our charts. And now I'm going to explain this indicator. So the MACD indicator is a trend following momentum indicator developed by Gerald Appel in the 1970s. It is designed to help traders identify changes in the strength, direction, and momentum of price movements. So the core components of the MACD is consists of three core components actually. We have the MACD line, the signal line, and the histogram. So the MACD line is the blue line, and this line is calculated by subtracting the 26 period EMA from the 12 period EMA. Now the MACD line reflects the difference between these two moving averages. For the next component, we have the signal line, which is the orange line. Now this line is a 9 period EMA of the MACD line, which acts as a trigger for buy or sell signals. Now, these two lines is what most traders use for their crossover signals, and we'll talk about that subsequently in the next section. For the third component is the histogram. Now, this histogram represents the difference between the MACD line and the signal line, and the histogram provides a visual representation of momentum strength. Now, this is very important, and we are going to talk about this in the next section. So, ensure you watch this video until the end. What MACD actually measures is the relationship between two moving averages, revealing both trend direction and momentum strength. When both EMAs move in the same direction with increasing distance between them, momentum is strong. You can see that happening right here. Two moving averages moving in the same direction with increasing distance shows that the momentum in this market here in this trend is a very strong one. Conversely, when they begin to converge, momentum is weakening and potentially signaling a reversal. You can see that happening here. Convergence happened right here. And at the same time, you can see all of this consolidation around this area. So let's talk about the MACD momentum alignment and strategy which we have to discuss today. The first step is to identify the trend direction, which is the first step to any strategy. Identify the trend direction, the market structure, and it's advisable you use the daily or 4-hour chart to determine this primary trend direction. So if the MACD line is above zero, it indicates bullish momentum. If it's below zero, it indicates bearish momentum. Now you should know that the MACD line is this blue colored line. And if it's above zero, it means that there's enough bullish momentum in the market and we should be looking for buy opportunities. You can see the crossing above the zero line here and being above zero for sustained periods, showing increased momentum, bullish momentum in the market. Another thing you should watch out for is for your step two. The next thing you should watch out for is your crossover confirmation, which most traders use and already know. You look for the MACD line to cross above the signal line for long entries or below for short entries. And this crossover confirms a shift in momentum. As you can see, once we have the MACD line crossing above the signal line, we should be expecting bullish prices at the same time. From here, we have price proceeding to break market structure to the upside after we have that crossover. Now, this helps us also gauge the momentum strength, the bullish momentum or the bearish momentum of price. at that moment. Now the third step is momentum confirmation. Now this is the most important. You can use the MACD histogram to confirm increasing momentum. A widening histogram, remember the histogram bars are these green bars and red bars here. Now you can use it to confirm increasing momentum. A widening histogram suggests strong momentum, making it a good time to enter a trade. Why a, a histogram that is actually reducing, as you can see here, right here, histogram converging here shows that momentum is weakening, and you should be looking for opportunities to get off the trade or take a counter trade. Could be that the market is switching from bullish to bearish when you start seeing the MACD histogram reducing like this all down to the zero line. So as you can see where we have it increasing steadily, it shows that there's enough bullish momentum and we should be looking to place our buy entries. So for your entry and your risk management, I'll suggest that once you have all three steps achieved by the MACD, once you have all three steps confirmed or your confluences are confirmed, you are free to take a trade. But you should ensure that all three steps are confirmed. First of all, your MACD line and your signal line should be above zero. And the next one is your crossover confirmation. Your MACD line should cross above or below the signal line depending on how you're looking at price. Are we bullish or are we bearish? And the third confirmation is your histogram confirmation. Your histogram bars should be increasing, showing increased momentum. It could be increased bullish or bearish momentum. For bearish bars, you can see here that we have reduced bearish momentum here. And at the same time in price, you would notice that this area where we started having this bearish trend starting, this minor bearish pullback starting here, it shows that there's not enough bearish momentum and we shouldn't be looking to take any sell trades this area. But at the same time, you have price showing us minor um colored histogram, red histogram bars, showing us that there's not enough bearish momentum in the market. But there we have also, you can also notice that the MACD line and the signal line is above zero. So this shows that we are still in the bullish territory and we should be waiting for these lines to cross below zero. That is one of our steps. Do not forget. And also you should also look out for the crossovers. Make sure that all three steps are aligned and confirmed before you take any trade. It could be that the crossover has come on, but the histogram bars are showing us reduced levels and showing that there's not enough bearish momentum. Then you shouldn't take the trade. It could be that we are still above zero and we've not gone below zero, just like we did right here. Here we went below zero, had the crossover here, and you can see the bearish histogram bars increasing here. Can see that clearly. So this gives us a go ahead to look for bearish entries. And you can see here at the same time we have price giving a break of structure and the pullback into resistance to continue the sell-off. So it's very easy. Here we have a 1:2.5 risk to reward ratio. So it's very easy to trade. All you have to do is ensure that all three steps and criteria have outlined here are all met before you take any trade. Here you can see we have this crossover and you can see the MACD line and the signal line going above zero. At the same time, you can also see rising histogram bars happening here showing increased bullish momentum. So this is where we should be looking to take buy entries. Looking at price action, we have a break of structure here, and at the same time price is coming back to retest that resistance turn support for a continuous push to the upside. So after confirming all three, we could look for buying opportunities, and we have one here. Just place our stop loss just below that key level, and I'll take profits all the way. It could be 1:2 or 1:3 risk to reward ratio. So it's very easy. I advise you study the charts and engage with us in the comments below of your experiences. We want to hear all about them. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.